Hello, everyone. Thank you for joining us today. Our webinar is Revolutionizing Financial Integrity, Seamless Transition Strategies to a New Chart of Accounts in JDE. I'm going to start with some quick introductions. We were supposed to have Arjanelle here. Arjanelle is our Business Development and Customer Relationship Management lead, and unfortunately, she is not able to make it. She had a last-minute emergency, so I'm going to try to cover her stuff. We also have Ed Kimtis. Ed is a senior finance director. He has over 40 years of accounting and finance experience, former CFO, and has done a ton of these chart of account design projects across a variety of different industries. You can see some of them there on the screen: mining, property management, manufacturing, real estate, a whole bunch of different industries. So he brings a ton of experience of optimal chart of accounts design strategies. And then my name is Larry Farino. I am the founder of ACBM Solutions, been working with JDE for about 20 years now. I've been a functional consultant. I started out as a functional consultant doing chart of account design and conversion work. A lot of you may know me from the orchestrator stuff that we do. ACBM focuses a lot on orchestrator now, but I actually got started with JD Edwards doing chart of account design and conversions, and so every year we still continue to do several of those types of projects. So moving along, just a quick background about ACBM Solutions. We're headquartered in Berkeley Heights, New Jersey. We are an Oracle partner, and we have a couple of Oracle validated integrations, again, mostly around Orchestrator. So about us, in addition to the chart of accounts design and conversion, as I mentioned, we do a lot of Orchestrator related work. So we do public and private training classes. On the consulting side, we do traditional JDE consulting like chart of accounts and regular JDE development type work. But we do a lot of application integration, process automation, and more recently, mobile and web app development with Orchestrator as sort of that middle layer. So we use Oracle's Visual Builder Cloud service as a front end and Orchestrator as that middle piece. On the solution side, again, the first three there are more Orchestrator related. So we have ADEX, which is our flagship product that allows people to call orchestrations from Excel. We have AJAM, which is a fantastic enhancement to the JDE Attachment Manager. Any sort of shortcoming or issue that you've seen with the Attachment Manager in JDE, we've solved with AJAM. Things like combining attachments into PDFs, emailing attachments, being able to display PDFs right in the web, all of those kinds of things are just done easily and natively within AJAM. Then IoT Fleet, which is actually how our company got started. We started by building out a fleet management solution for JD Edwards integrated with Orchestrator. So it's a way of tracking mobile assets, vehicle and equipment data, and turning that into users of JDE. And then lastly, we have Satova. So Satova was a reporting tool that was originally created by the former company that Ed and I worked at, which was GL Associates. It is a fantastic JDE reporting and query tool. And long story short, we acquired that product about 2 years ago, sunk a ton of money into R&D, and it's now become we restored it as really a fantastic enterprise grade reporting solution for JDE customers. So in terms of the agenda today, we're going to start with Ed talking about some symptoms of a poorly designed chart of accounts. So how do you identify that there might be a need for you to look at and examine your chart in JDE? We're going to look at the different components of the chart fields in JDE. So the company's business unit, object, subsidiary, subledger type, what those are, what they're used for, and what they shouldn't be used for. Then Ed's gonna take us through our COA design methodology and approach. as well as take a look at what some of our sample numbering methodologies are as well. So you can kind of see how we build out these hierarchies and allow us to do the main consolidations and hierarchical structures in JD Edwards rather than having to go and cherry pick from a bunch of different places and build all this report logic and make things sort of overly complicated. So we're going to look at the numbering methodology and see how you can streamline that whole process and make it way more efficient. We're going to take a look at some tips and tricks for chart of accounts design, and then we're going to look at what's next, which is kind of where I'm going to jump back in, and we're going to talk about chart of accounts conversion methodologies and kind of what the conversion process would look like once the design piece has been finished. So with that, I'm going to turn it over to Ed to start walking us through the symptoms of a chart of accounts that might need some extra help here.
Okay, thank you very much, Larry. Happy Leap Day to everybody. Got an extra day to work this year. Hope you are enjoying it. A little bit about myself. Larry mentioned that I'm a long-term finance person, ranging from my first job out of college as an accounts payable manager to being CFO of some legal entities of major European companies in North America. So for the finance folks who might be on today, I've been in your shoes in different capacities over the years, and have enjoyed the been subject to the joys and sorrows of closings and reportings and analyses. Today we're going to look at both the science and the art of chart of accounts design. The science being the architecture and functionality inherent in JD Edwards and how best to use that, and the art being ACBM's unique and time-tested approach to achieving your chart of accounts. As Larry mentioned, we both had our roots in chart of accounts design back in a former company, and working with a gentleman that had developed this, and it's a design methodology that's been used at many companies I've been involved in, 30 or more. But as a firm with Larry and our predecessor company, I'm sure it was well over 100 charts that were developed for pretty much any industry you can think of. Larry mentioned a bunch of them at the beginning. I can think of other ones. We've done municipalities, we've done utilities, we've done insurance companies, all having developed or identified the need for a new chart, and we were able to help them get to where they needed to be for their go-forward chart. Let's talk a little bit about systems of a poorly designed chart of accounts. Now, chart of accounts is not just the natural accounts, the assets, liabilities, revenues, expense, but it's really the combination of those with your organizational entities, being your companies, departments, lines of business, plants, location, things like that. So you need to capture the debit. The goal is we need to capture the debits and credits generated by business activity so that you can report on them. And business leaders that we talk to tell us quite often about the problems they have getting the analyses and the reportings they need in order to run their business and to be the fuel for making business decisions. And a lot of times when we're talking to financial folks, they talk to us about how difficult it is to maintain their chart of accounts. And we'll talk about some of those, the reasons, including things that maintaining their chart of accounts, and often because both reporting and the maintenance have been affected by Band-Aid solutions that have been implemented over the years. The chart of accounts that you developed many years ago may no longer be appropriate for the bigger company you are. So let's look at some of the systems. On the reporting side, often we hear about too much time compiling data, dropping information, data to Excel in order to turn it into actionable information, difficulty mapping, excuse me, from JDE which to reports, and the opposite. The auditors ask you a question about a line on your report, and you can have, depending on how you may sometimes have difficulty tracking that back to JD Edwards because of all the complex mappings that were used to create that report. Having category codes driving another symptom, having category codes drive your reporting as opposed to ranges of accounts. Report maintenance can be very difficult when you have a lot of complex mappings, because rather than using ranges of accounts, you're now needing to change report. When you add a new account, you add a new business unit, you have to change your reports, report by report and line by line, which can be quite cumbersome. We want to have a chart of accounts that's going to make that simpler, where you don't, when you're adding new accounts or new business units, there's no need to change the reports, that they'll be automatic. Another thing we hear about is I can't slice and dice the data the way I want it. I have a lot of data out there, but I can't turn it into the information I want. And I'm slowing down management decisions. I need reports and analyses quickly, and now it's taking me a long time because I need to download, I need to remap, that sort of thing. So those are some of the symptoms on the reporting side. And at the end of the day, we're collecting those debits and credits of business activity in order to get the reports to run the company. On the GL maintenance side, running out of object accounts, the one on the top left, which is a critical issue for sure. You need a design that contemplates the fact that you grow. Your existing chart may have been appropriate for the predecessor business 10, 20, 30 years ago, but now you've grown. You want either organically adding product lines, mergers and acquisitions, and quite often we find that the chart that's the incumbent chart was not designed with that sort of growth in mind. So we want to implement a new chart that takes care of what you need today, but also imagines that 10, 20, 30 years from now, things are going to change. And that the same chart that we designed today will be appropriate 30 years from now, because it's contemplated the fact that you're going to need accounts, individual accounts, ranges of accounts. You're going to acquire businesses. You may divest some business. You're going to add product lines or service lines, that sort of thing. So we want to think with the end and begin with the end in mind, and having a very flexible chart that will serve you for years to come. Excuse me. Over dependence on category codes. You can do a whole lot of things with category codes, but we don't want to use them to straighten out the mess below. We want to use them for the power they supply. Dependency on subsidiaries. A lot of times when folks have an old chart of accounts and they've developed a new need and another new need, another new need, often we see the subsidiaries being used in various ways, and often those are inefficient and can be replaced by better methodologies to capture that information rather than using the subsidiary code. We'll touch on that a little bit later, I believe, in the presentation. We don't want to be posting to summary level accounts, not using model charts of accounts. When we develop a chart you're going to use going forward, we want to develop model charts that will limit which accounts will be open to which types of business units, to prevent business units for using the accounts that aren't appropriate to them, and making journal entries and postings that will need to be reversed. So lead us not into temptation. Let's not open those accounts to those sorts of departments. Few things about a few definitions and components of a chart of accounts. The business unit, the business units where we need to capture organizational entities. That's where they need to be defined and represented. Now, some ERPs, PeopleSoft, Oracle, have multiple segments for defining departments and lines of business, locations, plants, excuse me, and sites and those sort of things. JDE only has one. So great care is required to make the best use of the business unit field, to use it in an efficient manner to capture the data, capture the information you need. So it's a little tricky in JD Edwards as compared to some other systems. And can it be done? Absolutely. It's done all the time. But quite often we find that it's a little messy in the encumbered chart of accounts, and we want to sort that out so it's no longer messy. Business units, obviously a 12-position alphanumeric code, and that's just defining who am I. I'm a department, I'm a business line, I'm a location, I'm a plant, that sort of thing. And you don't have to use all 12. And when we work through, we don't make any decision for how many positions we're going to use for any codes until the end. The design process will lead us to the solution that we need. So, excuse me, a little frog in my throat. The object is where the money is. So that's, history tells us that we run into people that have 4 positions, and that's usually indication of a system that was formed long ago. Time has told us that a 5-position object account is usually the optimal choice. Doesn't have to be, but we won't make any decision on how many positions there'll be. We're not going to make a decision on what the numbering ranges are until we've gone through all the analysis to see what is truly needed for your business. The subsidiary, I mentioned earlier, something we find often overused and used for purposes that it's not best suited for. We try to limit it to the usage of the subsidiary to where it's going to be really helpful, because subsidiary by itself doesn't have category codes, doesn't have tables. It's difficult to report on. So it's really the object subsidiary combination that is your account. But some examples of where we find it helpful would be like bank accounts or state codes. I have an account that means state tax. We could use a subsidiary, MA for Massachusetts, NG for New Jersey, TX for Texas, or something like that to further differentiate the account. What we'll find sometimes is that when people have got a chart of accounts that is old and gotten a little out of hand, they may start using it to define, of all things, departments and other things like that, or lines of business that can get extremely messy and very difficult for you to maintain on a go-forward basis. Subledgers, not a lot to talk about there. There's many uses for them, including intercompany work orders, that sort of thing, lease information, and encouraging folks to use validation whenever possible. Excuse me. We're going to want to design a chart of accounts that is going to directly support your reporting, and we focus first on the main financial consolidation. So if you're a public company, it'd be your 10K report, and then work backwards from that. Then there's different levels below that of the different reportings that you need, but we have to start someplace, and that's 9 times or 99 times out of 100 is the best place to start. Some of these things here, we don't have to talk about all of them, short AIDs and account numbers and all that, but we do look at posting edit codes. One, for instance, is inactive, where we could put historical information. Sometimes when doing your chart, we're going to find little bits and pieces of information that are not going to map to any particular new account. We can capture those dribs and drabs in a history account. And I think on one of the charts that's going to follow, I have an example of that you can see in the conversion, where some of that history would go, and later Larry will be explaining to you how data can, your history can be mechanically converted from the old system to the new. On the business units, I'll show some example of that, an example of how we might approach your business unit construction. And we'll try to limit the category codes to not use them to straighten out a mess below. Let's straighten out the mess below and then use category codes for such things as alternate reporting. We not so long ago did a pipeline company. They had a main financial consolidation, of course, for their corporation, but they had FERC reporting where they had to report to a governmental agency in a completely different manner. Other industries have such alternate reportings. That's where we can use the category codes to tease out the information that's needed in a completely different way than you might be running your business on a daily basis. Okay, here we go. So our methodology, we begin with the end in mind. So you're running your business off those reports and analyses. So we want to make and you need to provide those to not only to your financial folks, but to your business leaders to support business decisions. We want to make that as easy as possible to do on a daily basis and on a go-forward basis when your company's changing, when you're adding those new need for accounts. You're adding ranges of account. You're a bank and you acquire a shoe manufacturer. Well, now you need a whole nother set of accounts than you never needed before. We need to anticipate that and leave all kinds of room to give you the ultimate flexibility. So the power of our approach is, we think, is what leads to a great design. Recently, last year we finished 2 charts, happened to be for 2 mining companies, one for gold and one for coal. So one naughty and one nice. So our approach is really a tops-down approach, again, beginning with the end in mind of analyzing reports, cataloging, those reports, analyzing reports and analyses needed by all functions, not just one or the other, because there'd be needs. The tax department will have different needs than the FP&A department, than the CFO, than the legal department. So we got to take all those into mind. And we're going to look at the major reporting segments and really try to understand what they represent. The natural accounts, or your assets, liabilities, revenue, expense. And there's always a lot of cleanup to be done there. Things that are not used uniformly across your divisions, accounts that are in the wrong place, poor descriptions, things that large accounts that really should be split into pieces, small accounts that should be merged. All of those things. It's a quite an in-depth analysis to understand how the accounts should be organized and what can we remediate while we're doing the design. So we'll find things. I mean, accounts with weird names like Ohio or Indiana, things that account descriptions that only make sense if you know the account above it, that sort of thing. Another one we get into. A lot of time is spent in defining and understanding the legal the organizational entities. What is a legal entity? What are the property? What are the sites? What are the departments? Often it's not exactly what you think. We want to end up with a standard model that you can copy out to all your businesses, so we don't have to reinvent the wheel every time we do it. And we're going to use a charting software, and I'll show you an example in a couple of slides of how we organize the data to analyze. If you think about it, everything in a chart of accounts is a hierarchy. This account reports to this, to this, to this. So, a cash account is for a bank, it reports to cash and equivalents, which reports to current assets, which reports to assets. So we're going to use the charting software, and I'll show you that. that will actually show it that way. It makes it much easier to work on than a 10,000 row Excel spreadsheet. And we're going to do that with all the elements of the chart of accounts, not just the accounts, but it's the departments, it's the lines of business and the rest, to understand how those hierarchies are created. And it's so much easier to work with to fix them when you're doing it. We put them up on the screen and we say that doesn't belong there, it belongs over there, and we just easily move them, and much easier to see all the elements and how they relate to each other. So we inventory the reports. We're going to group accounts in the same way that they're going to be reported, so that you don't have to fish, what we call fishing. A lot of times you may experience now, if you want to have this account, you have to fish a little from here, you got to fish a little from there to get the total you want. We want it just to roll up naturally, right to the line you need, in as many lines as you need, in as many summaries that you need, and roll up all those details the way you need it. So it's an iterative process. We will chart out the accounts, we'll chart out the organizational entities, and then we'll work on it a little bit at a time with you in order to get to where we need. The solution is never found the first time around, because there's always new information, there's always challenges to the structure, and there's always new learnings. You know your business, you know your existing accounts very well. We do not, so we need to learn them as we go along, and we'll ask all the questions that we ask in order to challenge what it is you have and how we should get to the solution. We asked at the beginning that both of us put away our preconceived notions of what goes where, of how many positions or what a code should look like. Those things will come out at the end. If we have an open mind through the process, we find that we move faster and we get to a better solution. Sometimes, sometimes we've had situations with clients where they really want to do something one way or do it another, and we got to counsel them to, let's just slow down and look at all the ways. The way you're suggesting may very well be the right way, but let's let the design process lead us to proving that's the right way. Because normally there's one or two correct ways of doing something in JDE Edwards and 1,000 wrong ways. So we want to get the one that works best for you. And decades of experience shows us this process of moving through a little bit at a time on the organizational entities and accounts will get us to where we want to be. And then at the end, we'll document everything in a user manual for the chart of accounts and help you define go forward processes for adding such things as accounts, new departments and the like. What process can you put in place to avoid it getting out of control? Certainly, we've run into a lot. The coal mining company was a perfect example. They had implemented JDE, which was many, many years ago. And since then, they let each one of the mines do pretty much what they wanted to do. So you can imagine at the end of the day, getting the total of anything was quite difficult because every mine was doing it, was capturing data in a different way. So let's just talk a little numbering methodology. This is a very small section of an assets account, a few assets account using the charting software. So this is physically what it looks like when we're working with you. In each one of the boxes, we're capturing the name of the account. At the bottom, you can see I've got some new account numbers on a subsequent slide. I've got some old account numbers. We leave a space for us to put notes to ourselves in it. And these things, they're easy to chop. I could easily, this is a PDF, but if I had the live software and somebody said you need to move other current assets someplace else, I would just drop and drag it and it'd be done in 2 seconds. But it's a great way of showing the summary. So if we look at here, we've got assets, and we've just made it simple, had 2 summaries, current assets and non-current. And then below each, we've got below current assets, I've got 5 summary accounts. And then under non-current, I've got 2 summary accounts. So under each one of those, I could hang as many posting accounts as you need, or other summaries. Maybe under accounts receivable, there's 2 kinds of account receivable summaries. We would hang 2 summary accounts, and then below each one of those, as many posting accounts as you need to run your business. And we'll always leave, as I said before, plenty of space that within any of these ranges or between the ranges, we could add as many accounts as we're ever going to need. We want to leave that ample room for growth, because you cannot necessarily imagine what's going to happen in the years to come. One thing we find in a chart designed 10, 20, 30 years ago, fairly often we see 4 position object account numbers, which really puts you in a bind, because it's very hard. If you're in that position, you know it's very hard to find space. And in fact, you might be using sub accounts to extend that. You can see here with 5 positions, you're not going to run it. We're going to assign 10,000 accounts numbers to each major section: assets, liabilities, revenues, expense. So there'll be plenty of room for adding. Normally, and on these ones below current assets, I would spread those out horizontally and then hang all the posting accounts or other summaries below. And we do exactly the same thing we did department structure. You can imagine this is these could be different kinds of departments that chain up to each other. On the next slide, we're going to go the next level on PP&E. Some people call fixed assets, plant, property, and equipment. Let's just go see what would happen below there. So in that case, we have a summary, and we have 2 other summaries hanging below it: PP&E at cost and accumulated depreciation. And under those are your posting accounts. And you can see here the posting accounts end in odd numbers. What we do, or just a quick tip, is we end the summary accounts in 0, and we number the posting accounts in odd numbers, as Larry likes to say, maybe partly because we're odd, but because it leaves you, if nothing else, it leaves you double the space in any place. If you go from 1 to 3 to 4, etc. In this case, I left a lot of room because I wasn't sure. I said, okay, maybe we're going to have different kinds of fixed assets. So I left 100, just to show you could leave 100 if you wanted. You could leave 50. And in this case, we can see that the old account was 4 positions, 1501. I'm making 15301. We can capture here the 2 old accounts. In the old chart, there were 2 accounts. There really should be 1. And we capture it that way so that when Larry does the conversion, he can map. This gives an initial mapping of accounts. It says take these 2 old accounts and map it into this 1 new account. In this case, I took 1504 was the old account, and the .x means it had a lot of subsidiaries, and we're not going to need it. And we've determined we don't need, in this case, we don't need those subsidiaries. That tells Larry and the conversion team, take every instance of 1504 in any subsidiary and put it in the new account. And the same thing goes for the accumulated depreciation. So now we can look at easily by pulling account 15200, we can get PP&E cost. We can get the depreciation separate, or we can get the net PP&E. Quite simple. And you can imagine that mapping to reports you have. This being one report, one balance sheet at the summary level might just show PP&E net, but the next balance sheet may be one that's a little more detailed. We pull these 2 numbers. So easy to write the report, easy to map the data. And again, we don't number anything until we're done. So don't take these numbers to heart. We mentioned tips and tricks. Here's one example of an expense account that needed to be captured and then allocated out. So over here, we chose fringe benefits as an example. So we're capturing a bunch of employee fringe benefits posting accounts, benefits, workers' comp, 401k1 match, severance, and then a history account. I mentioned the history account. We're going to put dribs and drabs from the past. They're going to go there that really aren't needed going forward. Because when you're converting, you can convert many years of data. So there may be things that are current now, but 4 years ago they weren't. So something was you were capturing 4 years ago may not be pertinent today. So we're going to capture all the postings here, and we can get a gross fringe benefits account. And if we need to allocate that out, we're going to clear it out in this clearing account. We want to do that in a separate account and away from the gross. Quite often we see that clearing account, but it's built in with all the other accounts. So that for any department or any site, it's difficult for you to see what the number was before allocation. So let's do all the allocation in and out over here where it's simple to see. So it's a simple thing, but it's really quite powerful, and we've used it pretty much every place we've ever gone that where folks need to be allocating information from one place to another. Now, we talked about the business unit a little bit. Again, it's representing the organizational entities, departments, lines of business, etc. And we want to do that here. That's the purpose of the business unit segment in JD Edwards. And we do often see it has gotten out of hand at certain charts where people started using other things, groups of accounts, subsidiaries, subledgers in order to identify that stuff. So we need to identify what it is that makes up your company and then come up with some logical way, the best way of showing it. Now, every business unit can have many attributes. We cannot show them all in the code that you're going to use, but we want to reflect in the code things that are helpful to define what it is and make it more visible to the user. So it could be what location you're at, it could be line of business, it could be departments, those could be elements of the code. In this case, we've said it's the location, it's the line of business, and it's the department, and each one is 3 positions long. The length of the position, well, that'll be figured out when we see how many you have of all these different things, and trying to keep it not too crazy that you're using all 12 positions, which could be a little hard to understand. But if you need it, you need it. So each one of these things, and this is a part that sometimes can be a little bit difficult, defining what is a department, what is a location, what's a line of business. It sounds easy, but quite often it's not. And sometimes we'll come up, we'll find situations where somebody said, well, in my current chart, the last 3 positions stand for department, except for when they don't. And there's exceptions. So we're working towards making a uniform chart of accounts where every segment has the same meaning and is used uniformly across the entire organization. And we'll find those things out when we start tearing apart and getting below the surface of what you have. Let's talk about a few tips and tricks. So I guess this is a little bit of the ACBM secret sauce. Things to do. Chart it out visually. As I was showing you, and I hope you would agree that looking at these charts is a lot easier than looking at an Excel spreadsheet going down the page. And when we do these charts, let me just go back to one for a second. You can imagine for some companies, they have many balance sheet accounts. We can actually look at this one slide at a time. We can also print them and then put them up on the wall. And then when we call them the scrolls, because when you take them off the wall and roll them up, they look like, the Dead Sea Scrolls. And it's so easy to see how every account relates to every account. And then usually I'd use yellow to denote an account that really needs to be revisited, looked at again. There's some questions, and we'll capture all your old accounts. And it's really kind of a cool way of doing it. So back on our tips or tricks is using the visual method as opposed to an Excel spreadsheet. Aligning the non-posting accounts to match your consolidated reports. So we'll take those reports, and when we start building our scroll, we'll look what are the lines on your top reports and make sure that's how we build our scroll. So if there's a line that says total assets, well, I need that. If there's a line that says cash and equivalents, I need that. One that says PP needs that, et cetera, et cetera. So that they could come automatically from your JD Edwards to your reports, whatever tool you're using for reports, rather than having some kind of mapping. We end, as I mentioned before, the non-posting accounts at zeros. We start with odd numbers, but you can always go to even numbers on the posting accounts. It just allows double the room, always leaving room at the end of every range of accounts in between ranges of accounts, because you may acquire or start a business that's different than what you have today, and you need a whole range of accounts. We'll do that. Using levels, all the levels of detail as needed, and defining models that these SG&A departments are going to have one set of accounts. These accounts that are in operations or manufacturing out in the sites are going to have another set of accounts, so that you can avoid using the wrong accounts and then having to tease them out later. Another one that's not there is any account if there's any account that you need to on a regular basis go in and break apart in order to get the information you need, should be broken apart in the charts, because you can always add things together, but it's very difficult to take things apart. So if you're dumping to Excel or looking at individual journal entries, any of your departments, by the way, it might be a department that's not FP&A, but it might be tax or somebody else. That's a great candidate to split it out and make it a separate account, so you don't have to do any manual work or work outside the system to get it. Don't create all your posting accounts at the same level. Don't skip levels of detail. Don't assign your numbers until the end. We need to be able to be flexible to new information. Let's decide at the end what the numbering system is, because that's actually the least important thing. Once we have it all organized, it'll be easy to assign the numbers. Don't use zeros or spaces in front of segment values, because when you drop them to Excel, oops, they're gone. Let's not worry about what the length of the segment's values are going to be. We'll figure that out at the end. And if the configuration of your business units code, if your numbers change on your accounts, your folks are going to figure out how to do that. People typically will come up with a little crib sheet. Okay, it used to be this number, now it's that. It used to be this code for the business unit, now it's that. And then before you know it, it just becomes the new truth, and they'll be fully trained and be able to use the new numbers going forward. If we try to force ourselves to use some old code in an exquisite way and somehow try to shoehorn it into the new design, it may not be the best solution. Let's let the best solution come out and then go forward from there. Let's not post entries or convert information to summary accounts. And then and we already talked about the allocations one, not allocating from the account that receives the money, but having a separate account for that. Clean and easy way to do it. I think, Larry, that's the end of mine, so you will take over.
All right, thank you, Ed. And just a quick anecdote before I get into my stuff, Ed, and you had mentioned the extra tip that wasn't on here. I actually had a client that was doing exactly that. They were doing categorization outside of JDE. So what happened was they didn't have the right level of detail in JDE. So people would book everything to these accounts, all these journal entries to this account. And then every day, somebody else would have to do an extract of their account transactions, basically dump out the entire F0911 from the previous day, go through, find out what the correct category was, update a description field, and re-upload that into they went back and updated that back into JDE to put a description so that they could then categorize on that at the end of the month, which, again, it's a lot of work that doesn't add much value if they what we wound up doing was, of course, building out the chart to correct that issue, and we had the accounts at the right level of detail so they could just be booked where they belong from the beginning. So it's definitely an example of making sure that you have the right level of detail in your chart. You don't want it to be too granular so that everything only has a couple of cents in it, and you don't want it to be too summarized so that you have to do all this extra work to split back out what you need. Also, quick thing about Q&A. if anybody has a question, you can go to the Q&A button up at the top of it should be up at the top of your Teams menu. I do see we did have a question from Harry. So Harry was asking, besides the account description field, is there a place that can or should be used to add additional details, descriptions? I think it depends exactly what you're trying to capture, right? If it's something like usage notes or things like that, you can absolutely use the attachments, right? So JDE has attachments on many, many screens, including the account master. So if you go to the account master in JDE and you click on the little paperclip icon, you can add text attachments or any other attachment, and that might be a good place to do that. And then I guess sort of a shameless plug for our stuff. If you wanted to see those text attachment somewhere else, let's say you're on the journal entry screen and you're entering journal entries, you could use AJAM to see the notes that you put on the account master. So AJAM will allow you to bring attachments from other screens as long as you have the information that you need. And in this case, you do, right? We have the business unit object sub on our journal entry screen, so we could use that to link to the account master notes and bring them in for you on that screen or any other screen that has the account. So I would say, again, without knowing more about the individual usage, I would say that that's probably a good spot. Another thing is certainly with category codes, although we like to use them sparingly, depending on the use, you might have category codes and then use descriptions on the category codes. That could be something else as well. Okay, I am going to take control back here, Ed, and let's get into some additional GL configuration that we typically do as part of the design or really it's part of the conversion, right? So this is that intermediate step, like once we've done the design, but before we've converted all the data, there's some other things in the GL that should be looked at and can usually be greatly simplified. So Ed touched on the models already before, so I'm not going to spend too much time on that. But I will say it is important to not just have one model that you copy out to every business unit. We see that all the time, or sometimes people have a balance sheet and a P&L model, so they'll have two models and they copy one of those out to everything. That just winds up opening a whole bunch of accounts that probably shouldn't get used in many situations, right? Ed was giving the example of you don't want to open SG&A accounts to people in operations and vice versa. Sometimes even within expenses, you might want to separate direct expenses and indirect expenses and have different business units for those, in which case you wouldn't want to have expenses in a direct business unit using indirect expense accounts. So just once we've done this design and we have everything laid out in a really efficient way, make use of that. Use the models to make sure that things stay separated and you don't clutter your brand new beautiful chart with a bunch of garbage that shouldn't be there. Another thing we tend to look at is intercompany. Not that we necessarily recommend changing the intercompany method. I have them listed here, right? So there's detail method, there's a hub method, and then there's the configured hub method, which is either modified hub or modified detail. We could probably do a whole hour webinar on just intercompany. So I don't want to get into too much detail with that, but this is a good opportunity to look at how intercompany is set up, and quite frequently we're able to simplify that just based on the new company structure that winds up getting defined. The next two kind of go together. So model journal entries, of course, whatever model journal entries you had before will need to be updated. Hopefully, in many cases, they can be eliminated. We see all the time that by simplifying the chart, we can remove journal entries. Some of them, of course, have to still stay there. You'll still, I'm not saying that model journal entries will go away, but some of them might. And then on the allocation side, we have the three types of allocations in JDE: the recurring journal entries, the indexed allocations, and the advanced variable numerator allocations. Those can almost certainly be simplified. You might have 100+ row indexed allocations before a chart of accounts design that goes to a 1 or 2 line allocation after the chart design. So kind of keep these things in mind and take the opportunity that if you're going to go through the exercise of doing a chart of accounts, make sure you look at these things and simplify them so that you can maximize the efficiency of this new chart that's designed. Okay, so what's next? We've designed this chart, and now what do we do with it? Well, first, the output of the design is a design book, right? So that's something that Ed usually puts together for our clients, where we go through and we talk about what was there before, what's going to be there going forward, and the crosswalk between them. We also take this opportunity to define the policies and procedures around the accounts, which goes hand in hand with forms for requesting new business units and accounts. You want to make sure that you have proper governance around your chart of accounts so that it doesn't become unwieldy again. We go into a lot of places where anybody can just go start and creating their own accounts, or many people can go and create their own accounts. And that leads to improper usage of new accounts, or improper usage of existing accounts, and new accounts that shouldn't really be there, right? So put some controls, put some governance around this, have a formal request and approval process, and then make it an IT function to actually go and add the new business unit and account, right? So your accounting and finance teams will make the request and approval, but make it separated and make IT actually add the new business unit and accounts. And this way, it's just that extra layer of control so that it doesn't get out of control. Converting the data, of course, once you have this design, you want to be able to use it. So I have a couple slides coming up on how we actually convert the data. It's usually either an in-place conversion, which is what most people prefer, where you convert all of the history and you leave that in place in JD Edwards, or sometimes people will just migrate balances and open amounts, right? So you could bring over like the GL balances for the past year or two and bring over open AR and open AP. It's a little bit of a shorter or easier process and a little bit less expensive, but then you don't get all of the history, and so that might make it a little more challenging in certain other situations. So normally we kind of, if it's just a chart of accounts design within JDE, we normally kind of recommend going the in-place conversion route, but we've done both. So you have all of this data converted. You also need to be able to report on it, right? That's the whole point of optimizing your chart of accounts, is you need to be able to get this data out in a meaningful way. So you need to have a good reporting tool. I guess another shameless plug, Satova is a fantastic one, but I know that there are many others that a lot of people are using. But you need to be able to go back and update your reports and use this new chart. It's a little bit of a process to do that, but I will tell you, creating these reports with a new chart is 1,000 times easier than however they were built before with the old chart, right? Because as Ed was talking about, you don't have to cherry pick from all over the place. You don't have to build all this custom logic. The chart has been designed so that you just pick ranges and level of details so that everything naturally rolls up. So the reports are one part of the conversion, and then also updating the interfaces. So we, of course, like to use Orchestrator. There are other methods out there, but making sure that all of your existing integrations and interfaces to third-party systems work with the new chart as well. So what does the COA conversion look like? It starts with really defining what the requirements are. For the in-place conversion, you start with the table and field analysis. What are all the tables and all the fields that are going to be impacted by a chart of accounts in JDE? Then we got to make sure that we have mappings for all of the old values and what the corresponding new value is in the design. Fortunately, when we get the design documents from Ed, they have 80+% of what's needed there, probably closer to 90% of what's needed in there. But then when we actually go through, when we look at your chart, there might be an account that hasn't been used in 17 years and we still have to have a home for it, right? So we go through and we find all those other things that kind of fall out. Or of course, anything new that's added. There's people creating transactions even after the design is finished, but before we've converted. So we need to pick those things up all the time. We create the conversion rules. So it's important to have a repeatable process. We have a couple of third-party tools that we work with kind of regularly. And the benefit of using a tool like that is that we're able to define these conversion rules that make it controlled and repeatable. And then you have to run several test conversions. We say 3 here. In reality, it's usually 5 or 6 or sometimes more than that. But you want to have at least 3 rounds of testing after these conversions, right? So you want to have unit testing, which is usually done by our team, and making sure that the data was converted and updated and everything kind of worked the way we were expecting. Then we have CRP testing to make sure that all the functionality in JDE is still working. You can add new accounts, create journal entries, create POs, all that kind of stuff. And then you have a more thorough test, the UAT test, where we do a lot more reconciliation and data validation. And this may or may not include integration testing. That might be a 4th set of conversions as well. Sometimes it's part of UAT, sometimes it's separate. But it's important to make sure that you test all of those integrations as well. On the data migration side, it's very, very similar, right? You have, if you're not doing an in-place conversion, you have to use Z files or orchestrations or something like that to bring the data in, but you're usually doing much less data. It's just, very recent history and open accounts and open balances. But you still have to do the same kind of mapping. You still have to build some sort of repeatable process, whether it be orchestrations or otherwise, to get this data loaded into JDE, and then of course still the same kinds of testing. So the question I always get asked is the timeline. How long does it take to do this? Usually the design is like 3 to 4 months. Sometimes it's a little bit quicker, sometimes a little bit longer. And then the conversion winds up usually taking about 4 to 6 months, to get those, to get through those processes. Quick case study. So Ed was mentioning 2 of the clients that he did designs for last year. Here's one of them that we converted. It was actually the largest one, so I like to tell the story. We actually went live with them about a month ago, 5 weeks ago to today, actually. We use a third-party conversion tool, one from Cone Resnick that was mentioned here. It was the largest one with over 500 million records. That is abnormally large. Normally we see, I'll say, 50 to 100 million records is a good size. Sometimes they're even a little less than the 50 million. But this one had 500 million, so it was huge. And we were able to get it done in really over a weekend. We had over 250 tables, which again is on the larger side. Normally we have in the 120 to 150 range. This was at 250. And we had over 700 fields across all these different chart of accounts fields, right? So while the design is focused on company, business unit, object, sub, and subledger, we also have to make sure that on the conversion side, we account for the new AIDs and the ANIs. And as you can see here, we were able to do a proof mode conversion in 9 hours and final mode in 10 hours, which is extraordinary. That is really, really, really fast for doing a conversion. I know in the past, I think the largest one I had done before this was just a little over 300 million records, and it took us a full 3 days to do that one. It was with a different tool, so there was definitely some performance gains using this one. So we're going to open it up to Q&A in a second. Just some upcoming webinars. Today was our chart of accounts webinar. Next month on March 27th, at the same time, we are going to be doing a webinar on Satova. So this is the reporting tool that I had mentioned earlier. It's a fantastic user-friendly way for users to get data out of JD Edwards. And then in April, we're going to be looking to do a mobile app webinar where we're going to talk about how to build mobile apps with Orchestrator and Visual Builder Cloud Service. If you're coming to Blueprint, we have at least these 2 sessions. We have a third one that's kind of pending, so I'm hoping we're going to get a third one. The third one would be on mobile apps. But the first one is going to be on chart of accounts, so it's with Agnico Eagle Mines. They're the ones that I just mentioned on a couple of slides ago about the that large conversion, that 500 million record conversion. So come and check that out if you're going there. And then we're also doing one on integrations with Salesforce and JD Edwards using Orchestrator from one of our other clients, Darley. And definitely stop by and visit us in the exhibit hall. We're down here in the bottom right-hand corner, kind of near where all the lunch tables are going to be. And so with that, I will open it up to any other questions. I know we're right at time, so we'll just hang on for a minute or two. If there are any other questions, please feel free to put them in the Q&A box, or feel free to email our Janelle or Ed or myself. Our contact information is up on this last Q&A slide. So like I said, we'll hang around for another question. If anyone has them, Otherwise, thank you so much for joining us today. We appreciate you taking the time, and we hope to see you on one of our future webinars. Okay, here's a question that came in. Chris was asking, what was the tool used to do the fast conversion? It was a tool by Cohn Resnick. At the time, it was called Torgence. I believe they're rebranding it, so I'm not sure what the new name is going to be. But Chris, I'm happy to kind of walk you through that. It was a good tool. It was really, really fast the way that they had built it. There's always, when you're doing conversion, there's always a trade-off between speed and space. So their tool took up a ton of space, but it went really, really fast. And that was necessary because they had such a big database and we had to turn through so many records. But thank you for that question there, Chris. All right. And then I see in the chat, so thank you, Mohammed. Thank you, China. Appreciate you guys taking the time. Hang out for one more minute and then I'll wrap this up. All right. It looks like we've got through all the questions. So thank you again, everyone. Have a great rest of the day.
Yeah, thank you. Thank you very much.